This episode was originally going to be with an NFT artist, but they had to cancel last minute, and it's Wednesday, and I'm like, okay, I want to get the pod out the next day. How do I get this done? So on this episode, I'm going to share my candid thoughts and views. And once again, this is not financial advice on how Bitcoin potentially gets to $1 million per Bitcoin. And I'm even going to say, I feel, and I'm not a Nostradamus on this, there are many other people in the cryptocurrency community, the investing community, the Bitcoin community, that also think by 2032 or in 10 years from now, we will have a $1 million Bitcoin. I'm Jarrett Carpenter, and this is More Than Blockchain. This episode is a quick pod, and so I'm going to do my best to keep this as concise as possible, ideally under 10 minutes. But if I go over, I'm sorry. I created quick pods as a way to just convey a message kind of super simply, and I don't always think people have time for an hour and a half podcast, an interview, etc. I think that we now consume media, we consume information in really much smaller chunks. So I'm going to try to keep this as brief as possible. Normally when I do quick pods, I write them out and then I read them. So it's kind of like an audio blog. And really that's kind of what podcasts are. You know, any podcast could be transcribed and you can read it and you could get a lot of value from it too. But we like to be able to do laundry or work out or be in the car or be doing other things as we're consuming information. So I hope to keep this concise, and I hope to build some context as to why I believe that Bitcoin will get to $1 million per coin by the year 2032. And like I said, I have some notes. I didn't write anything down, and I hope that this comes out well as an episode. One of the things I think I want to talk about first is Bitcoin as a brand. Bitcoin, if you put it up next to other brands, you'll be fairly surprised with just how quickly Bitcoin got to a $1 trillion valuation. So it took Microsoft 44 years. It took Apple 42 years to get to a $1 trillion valuation. It took Amazon 24 years. It took Google 21 years. It took Tesla 18 years. And it's only taken Bitcoin 12 years. That means it's taken Bitcoin half the time to get to $1 trillion than it took Amazon, which is pretty impressive, because if you're listening to this and you're stateside, you're probably more likely to have an Amazon Prime account, as 80% of households do in the United States, than maybe own Bitcoin. So that's got to make you think, how is there this huge elephant in the room that I don't really have a stake in when maybe my computer is a Microsoft or it's an Apple? I probably use Google to search for things, or I use Google Maps. I order stuff online via Amazon, and I don't yet, but one day I plan on owning a Tesla. So Bitcoin as a brand, it has never run ads. It doesn't offer free day returns, free next day returns, yet it got to $1 trillion. And part of this also has to do with a narrative around money and how we as humans always go towards the hardest money. Now, in a future episode, I'm going to go through and break down the book by Saifedean Ammous called The Bitcoin Standard, which really outlines why humanity has always basically gone towards the hardest money, or in other words, to say the thing that's hardest to make that we can use as a means to transfer value. Throughout the years, this has been shells, different types of shells that are unique and hard to find at the bottom of the sea. This has been beads of glass, which were not always easy to make hundreds of years ago. This was stones, massive stones. This has taken the form of cattle. This has taken the form of gold. It's taken the form of many things. There's something that's hard to produce will always be the hardest money. And over the long enough time period, we as humans always basically find ourselves with the hardest money. And there's a book called The Bitcoin Standard. And like I said, I will do an entire episode dedicated to this and the 10 things that I learned from that book that will be coming up soon. But the idea is that we as humans need things that cannot easily be produced to hold value and be our stores of value and allow us to transfer economic energy or value amongst ourselves. And this is a very important thing. So, as we fast forward to today, and I have in my notes inflation, money printing, we are now in a world where the money that we use essentially is not tied to anything that is hard money. It's not printing dollar bills for the US government, for example, is easy for them to do. Therefore, it's not a hard form of money. It's not gold, for example. Gold you can't just find anywhere. It only comes from certain parts of the earth, and I think the overall gold supply increases by about 2% every year. So that is something calculable and something that we can kind of work into our economic models, which is why when we went off the gold standard, and once again, this is probably some information for another episode, we started to get into realms of inflation. So I have money printing and inflation. We're now in a world where the money that we use and we transact every single day is not tied to anything other than the value that we intrinsically give to it. If you have dollars, you're like, I believe in the US government. I believe in the dollar. Therefore, I'm going to hold on to these. I'm going to store them under my mattress, or I'm going to keep them. However, if you were in a country like Venezuela, the currency has lost so much purchasing power, or it's been so devalued that you no longer have any faith in it, and nor do other people, so they don't want to accumulate it. And once again, this goes back to the argument that I will outline in a further episode talking about the book, The Bitcoin Standard. But in essence, like I said, we as humans always go towards the hardest form of money. And when you fast forward in human history, we've gone from gold, well, we've gone from beads, cattle, rocks, different types of valuable stones, rare earth metals like gold. Now we're in a fiat currency system where we use paper money that used to be backed by gold but is no longer backed by gold. There are many arguments out there that say the evolution of humanity in money will lead us to something like Bitcoin, which is programmed to it's going to happen about every 4 years. It really has to do with the block cycles within the blockchain. Every 4 years, though, on our like human calendars, I guess we could say, not tied to Bitcoin, the amount of Bitcoin that is released will be lessened. So the supply will decrease. So imagine you have 10 people standing around a room and there are 10 bowls. So everyone gets a bowl. But every 4 years, one less bowl is in the room. So then after 4 years, you have 10 people and only 9 bowls. Now the demand for all of these bowls, even though you haven't changed or increased the demand, you've just lowered the supply, the demand inherently increases. And therefore the price or the desire to acquire the 9 bowls by the 10 people would then increase. And then you wait a couple more years and then you have 10 people and 8 bowls. And I know that that's a very, very simplistic example, but with the bowl example, you would have to expect that maybe after 4 years, there are new people that are part of the community. So then there are babies or something like that. And once again, I am going a little off here, but the idea is as more people want less amounts of things, the price or the ability to put a price on the bowls or the things, or in this case, Bitcoin, will inherently increase. And that is a super simplistic way. And somebody explained, I remember I watched a YouTube and it was like how to explain Bitcoin and how it will appreciate to a 5-year-old. There's a lot of explain it to me like I'm 5. Well, that's how they did it. It was with, I think, apples and students at a school. So if you extrapolate that out, when you get down to 2 bowls and now the community has grown to 15 people, well, you can imagine the price or what people would give up or exchange to be able to have one of the bowls. Translating this idea into Bitcoin, we find that every 4 years there's something called the halvening. Now, I should probably go into more detail into what the halvening is, but basically every 4 years, less Bitcoin by half of the supply. Think of it like a half-life of radiation, if you will. You start with 100 years, then 50 years, then 25, then 12.5, then 7.7, 6.75, etc. Something like that, where half of the supply that was previously released out into the market will happen every 4 years. So What does that do? That means that every 4 years, if we go back to the bowl example, there is going to be less bowls, right? With the bowl example. But every 4 years in Bitcoin, there's going to be less Bitcoin released on the market. And every time this happens, the price will increase. Because even though the demand could, even if the demand, if we assume the demand stays the same, because the supply will decrease, the price per unit of the desired bowl, or in this case, Bitcoin, will increase. And when you increase the demand and you decrease the supply, that is how Bitcoin goes in 1 year or about 16 months from $3,000 to $20,000, or in 2 years from $3,000 to about $70,000. So Bitcoin currently is sitting at around 41,000. And to get to $1 million per coin would be 25x, because 40,000 times 25 will give you $1 million. And in the history of Bitcoin, having Bitcoin go up 25x is kind of like peanuts. It's done that X times over. There was a time in 2009 when one Bitcoin was worth 9 cents. And here we are today, and it's worth $41,000. So the other thing I want to touch on there is inflation. Inflation, we're dealing with it now as a global community, and every single country is having its own problems with inflation. The numbers were just released, and I think year on year from March 2021 to March 2022, it was 8.25% inflation in the United States. Now, other countries have seen this much worse, other countries have seen this less. Inflation, there are a lot of factors that play into inflation, but when we think about the long term investment strategies that are out there, if the current stock market, which in the past 100 years, and I know that doesn't mean that in the next 100 years this will repeat, but if we assume that it does, because we can use history to forecast the future, it's one of our best indicators. It doesn't mean it's going to happen. This is the hot hand fallacy, where in basketball, just because you've made 3 shots doesn't mean you're going to make your fourth. But if we use the historical data that we have and we look at the stock market, it gives compound annual returns of somewhere between 7 to 12%. So if we assume that in the next 10 years, from 2022 to 2032, we're going to get the higher limit of that range, and it's going to be 12%. But we have an inflation rate of 8.25%. Once again, this is an assumption that that will continue. I do not think it will continue at that number. Then in real terms, we're only actually gaining around 4% of annual compound interest, which, if you compare it to Bitcoin in the last 10 years, we don't have as much data on Bitcoin as we do with the stock market. Bitcoin has grown annually in a compound somewhere between 180 to 200% annually. So if you compare that 180 to 200% annually to 4% when you take into account inflation, you can see that as we move forward, Tesla isn't going to be the only company that's going to invest and buy Bitcoin and hold it on its balance sheet. El Salvador isn't going to be the only country that's going to adopt Bitcoin as legal tender. Honduras is already starting to do it, as they've looked over and said, hey, our neighbors are doing pretty well. Maybe we should do this. So, due to some mix of inflation, I believe money printing, and supply chain quagmires, we could see a perfect storm preparing us for the next halvening. And the next halvening is going to happen somewhere around May of 2024 and will last around 12 to 16 months, at which point we could see Bitcoin probably crack 200 to 250,000, which will probably give it the legitimacy it needs to be adopted by more governments, bigger institutions, pension funds, and it may even be the way that we start to price real estate in Bitcoin. And I think that this will happen around the globe, maybe before it happens in the United States. And once again, this is due to the fact that the United States has a more stable, and I'm throwing air quotes, currency than other countries. But in a country like Venezuela, where the currency is really unstable and prices change all the time, or even in Argentina, maybe they'll just start to use Bitcoin as kind of the standard to say, hey, this house is worth this much Bitcoin, right? It would allow people to be able in real time to figure out how much the house is worth. They could also tie it to dollars, but maybe they'll use Bitcoin. But when institutions, pension funds, governments, and real estate starts to kind of dive into Bitcoin, either using it as a mechanism to price housing, using it as a way to transfer value, or, in the exchange of, hey, I bought your house, it was 7 Bitcoin, etc. Bitcoin will probably be around 400 to 500,000. And then as the next halvening happens in 2028, leading into almost 2032, when there's another supply shock, you can see how we start to get to $1 million valuation. This is also a time by 2030 where there's going to be millions of more humans on the earth who also have access to smartphones where they can keep a digital wallet and take their local fiat paper currency and turn it into Bitcoin. My last thing is the FANG stocks: Facebook, Amazon, Apple, Netflix, and Google. If they were to even just put 5 to 10% of their balance sheets into Bitcoin, it would not only give it an economic boost, but it would give it the legitimacy and allow other Fortune 500 companies as well as small businesses to hop in. And because Bitcoin's only worth about 800 billion right now, it's come down from its $1 trillion cap. If it gets to even 10 trillion, it's worth 400,000 a coin. And right now, 10 trillion is the value of gold. And as I've said, we as humans always go towards the hardest money. And we already went from gold to paper. And I think it's about time for us to go from paper to Bitcoin. So that is how we get to $1 million Bitcoin by 2032. Thanks for listening to this episode. And if you have the time or you're curious, go ahead and Google the halvening and read up on how Bitcoin is programmed to lower its supply every, roughly, like I said, about 4 years. It has to do with the blocks, but it comes out around every 4 years. This is an extremely important part of Bitcoin that I think once you understand, you start to see the exponential potential it has to really increase in price. And some would even say that by 2032, my estimate, and once again, I'm not the only one to think this is not even my idea, but the idea that Bitcoin could go to $1 million by 2032, for some in the Bitcoin community, is conservative. Be sure to follow us on social media, whatever platform you're on. We're probably on at More Than Blockchain, and subscribe to the pod wherever you are listening to the episode. And I ask this in almost all the outros, but if you found this interesting at all and you think someone else could gain value from it, go ahead, send them an email, a text, or a DM and say, hey, check out this episode. I think it's pretty cool. Ask them, do you own Bitcoin? Because like I said in this episode, as far as the other brands, they're probably on an Apple. Maybe they're even listening to this through Google Podcasts. They're probably an Amazon Prime account holder, or they've used Amazon before, or maybe they're even driving a Tesla. So it only makes sense in the world of big brands via social proof and $1 trillion valuations that they maybe think about Bitcoin. But once again, this is not financial advice. So thanks again for listening to this episode, and I'll see everyone next time.